Good day, everyone. Trust we all are doing good. I'm Tio, and welcome to my day 39 video of the 100 Days of Technical Analysis Challenge. Today, I'll be looking at DXY, the dollar index. So let's dive right into it. So the dollar index from like the bigger perspective, looking left to get right, you can actually see that previously we were on a major downtrend, and this was like the most significant area of structure. So, marking this significant area of structure out, like from this level, marking this significant area of structure out, what do you see? You can see price actually moved above it, broke out of it, then came back for a retest. Now, what is this telling us? It's telling us that the direction and momentum of price has changed. It has changed from being a downtrend and now it is in an uptrend. With that known, I can actually look to measure into relevance in price at this area of structure. Now, looking closely at this, we can see we had an impulse, correction, and the way the market moves, price moves that way, impulsively to the upside, correctively against the trend, impulsively to the upside, correctively against the trend, impulsively to the upside. Same applies to a downtrend, impulsively to the downside, correctively against the trend, impulsively to the downside, correctively against the trend, impulsively to the downside. So that is how the market moves in phases, the impulsive phase and the corrective phase. Now, dealing with relevance here in price at this current area of structure, looking closely at it, this is like where price actually is. So yes, looking at this area of structure, what do we have here? Price acted as support at this area, support at this area, acted as support, broke through, came back into the area of structure, and price is currently at this area. So we expect the same thing to happen, the same thing that has been happening previously at this area of structure. Price would act as support, expected support at this area. Now, with that known, I can actually look to measure into where price will be heading to. And also looking closely, if I should put my fibs on this chart from the swing low to the swing guy, yeah, right here. What do we see? We can see price is actually, oh, sorry. What do we see? We can see price is actually at a significant area of structure. Price is at a zone which is previous, which has acted as support previously, and also that zone is in between the 61.8 fib level and the 78.6 fib level. Further confluence that there might be a tendency of price to move to the upside. Now, with this known, I can actually look to, okay, my bias would be to go long on this. And looking closely also, we have an M pattern right here, an overextended M pattern to be precise. And in all of my videos, I try as much as possible to explain the concept behind the M and W pattern. I said if the M pattern forms, be it an overextended M pattern or a normal M pattern, price will surely come back to the net line, then project further. The net line is always a significant fib area of structure. Same applies to the W pattern. If a W pattern forms, price would always come back to the net line, be it an overextended W pattern. It will surely come back to the net line before projecting in its expected direction. Now with this one, we can actually look to actually measure on the move to the upside, which is to the net line. So I would love to mark out the net line. When I mark out my M and W patterns net line, I love to use the line chart because it actually shows significance in price. Now with that known, I know that that is my net line. So I'm actually expecting price to come back to the net line, which is this area structure. So I can take away these fibs because it's of no use to me. I've kept in mind, okay, price is in between the 61.8 and the 78.6 fib level. So now I can drop down to a lower time frame, which is the weekly time frame. Now on the weekly time frame, what do we have? We can see last week we had an indecision candle. Yeah. And this week candle is yet to close. So whatever I'll be doing, I'll be waiting for price reaction. If this week candle should actually close above a little bit higher, then I might look to go long on this. Or if I get a price action trigger of the daily or the 4 hour time frame, which is like a bullish price action trigger, I would look to go long. And also look at what we have here. We still have a minor M pattern right here. So price should actually be able to come back to the net line of this general M pattern. So a pattern within a pattern also, and price is at a zone. We have an indecision candle. Confluences for a buy move, a possible buy move on this in on this index is actually building up. Now to the daily time frame. On the daily time frame, what do we have? We can see price actually consolidated for a while, then broke out to the downside. So this area in which it broke out to, this area of structure right here, price broke below it, but never closed below it that much because immediately we had a bullish engulfing candle. Now look at this closely. Price acted as support, broke through, never closed below as much as we want, came back in. So it acted as support also. And here also it acted as support. So we'll be expecting the same thing, support reaction right here. So it's just like a significance of possible price projection, which will actually lead us to an inverted head and shoulders right here. With that known, I see this sloping movement, which is really like a regular price action. Adding my RSI on the chart, I can now look at it closely and see this is a divergence. This is a bullish divergence to be precise. So bullish divergence further confluence that there is a huge tendency price might or price would move to the upside. Further confluence. So I can actually take that off my chart, then go down to a smaller time frame, which is the 4 hour time frame. Now on the 4 hour time frame, what can I see? Price moved impulsively to the downside. Then all of a sudden we had this massive bullish momentum candle here. Then we had this impulse, correction, impulse, and we are in a corrective phase of the 4 hour time frame. Now, of the 4 hour time frame, I can mark out this counter trend right here. Yes, so I'll be looking to actually buy DXY if there is a break of this counter trend to the upside. So now to the 1 hour time frame, which is like the next time frame I always check, the last time frame I always check to be precise. I can see how well price is at this area and price is forming a double bottom pattern. Yeah, or price formed a double bottom pattern to be precise. Price formed a double bottom pattern. So it's actually a heads up for me to actually look to go long on DXY, the dollar index. So that is my bias on DXY, the dollar index. I'll look to go long back to this significant area of structure right here, which is the neckline of the W pattern. So um that is my bias to go long on DXY. So if you do have a bias in alignment or against my bias, please do drop it in the comments down below. I would love to hear it. And please do like and follow. Thank you.